Hello and welcome to Crypto Weeklies. Today in this video we'll be forecasting Bitcoin. We'll be conducting machine learning based price forecast for BTC. Also discussing the new all-time high that Bitcoin has made and regression based analysis and accumulation strategies for Bitcoin. None of the content is financial advice. We also have estimated bull target for the upcoming bull run of 2025. The chart that you are seeing on the screen is the normalized risk model for Bitcoin, and this is based on the a relationship between the Bitcoin's price action and the 20-week moving average. And based on that relationship, that is, if the price of BTC is too far gone from the 20-week moving average or too undervalued from the 20-week moving average, the risk levels are normalized between 0 and 1 and also covered in these bands where the low risk territory is color coded in this green color and the high risk territories are color coded in the shades of red and orange. And this the way to interpret this chart is whenever the prices are in this low risk territory, DCAing in the market is making the most sense, whereas the prices in this orange territory or the red territory, DCAing out of the market makes most sense. And one key highlight that I wanted to present is back in March of 2024, per this analysis, the risk associated with dollar cost averaging Bitcoin was at around 78%. Now the risk has gone down to about 47% or 0.47 at today's price at around November 6th. That means even though the price of Bitcoin is essentially same or slightly higher than March 2024, the risks have gone down. That means that is because the prices are moving very close to the 20-week moving average. That means the prices are not that overvalued as they were back in March of 2024. You can see the prices at around 74,000 and you can see that price corresponds to the price very close to the early March of 2024 price at around $72,000. So that's one highlight that I wanted to share before moving any further. Now that we'll talk a little bit about the price analysis and the machine learning based price forecast. This is the weekly price action for Bitcoin. We have about data for slightly more than 10 years on this chart from September 2014 till about November 2024, slightly over 10 years worth of data. This data is fed to the machine learning algorithm trained on ARIMA, LSTM and XGBoost techniques, and this the machine learning based price algorithm forecasts again personally curated by me, and the three scenarios forecasted by the model. The trend based forecast, which is again without any bullish or bearish bias, the price on its own and its trend is captured by this this pink line. Then the yellow line is the 1 standard deviation bull case, the green line is the 1 standard deviation bear case. The base case or the trend based forecast for Bitcoin between 71k and about 80k between now and April of 2024. This is without any price momentums in bullish or bearish phases. So in the bull case scenario for this particular week, the 1 standard deviation peak is at around $75,280. The price did go slightly higher at around 75k for this week, but still has corrected back to 74k. If the prices were to go slightly higher than 75k, the key level of interest is to watch this 95 percentile or 2 standard deviation based forecast for Bitcoin. Usually they occur during the euphoria phase, which may last for several weeks or several months. But right now we are well within the 1 standard deviation bull case for Bitcoin, and that bull case is between 75k for this week towards the end of year at around 90k, and towards middle of April at around 112k Bitcoin. And the 2 standard deviation case is between 78k and about 108k between now and end of year 2024, and towards the early part of 2025 between 108k and about 151k for Bitcoin. In terms of the bear case scenario, that is the 1 standard deviation bear case, if the markets were to correct, the price action supported between theoretical support between 56k and about 67k, and week by week these values tend to change. So if you're interested in how these values look week over week, they are available on cryptoweeklies.com on the same chart. This is the base case, and to its left are the 3 standard deviation bear cases for each week, and to its right are the 3 standard deviation bull cases for each week. So that's where we can find, not just for Bitcoin, for most of the top 100 cryptos by market cap, this machine learning based price forecast. Now the regression based analysis for Bitcoin, we can check based on what is the price doing in terms of the relationship between the price and the polynomial regression based function for Bitcoin. This pink line represents a fair value for Bitcoin. In the bullish phases of the market, the price is slightly higher than the pink line, and in the euphoria phases definitely a lot higher than the pink line. In the bear cases, again a price lower than this pink line. Per this analysis, the prices over the last 20 weeks or so have been holding some resistance at this pink line, which is the fair value per the polynomial regression based model. This valuation is coming in at around $77,875. So a $77,875 Bitcoin would be considered as a fairly valued Bitcoin per this model. That means the price at around 74k is about 3.5k short of the fair value, and the prices have had this relationship with this fair value for the last 20 weeks, where they are moving as the fair value is going up in this upward bias. In terms of the what could be considered as a 1 standard deviation ceiling, so if you were to analyze Bitcoin in a non-euphoria bull case like Bitcoin witnessed in early to mid March of 2024, that 1 standard deviation ceiling back then was at around 75k. Prices did go as close to the 1 standard deviation ceiling, but they didn't breach the 1 standard deviation ceiling. Back then that ceiling was at around 75k. Now that 1 standard deviation ceiling is at around 127,000. So the way to interpret this is a 127,000 Bitcoin would be as overvalued as Bitcoin was at around 75k at in early March of 2024. So that's the key level to watch to the upside. To the downside, if that is interpreting what Bitcoin does in a bear market, some of the key levels of support that Bitcoin has had before the eventual drop of November-December 2022. If you were to extrapolate that line using this polynomial regression function, that 1 standard deviation support is coming in at around 48,000. That means 48,000 Bitcoin right now would be as undervalued as Bitcoin was at around 17k back in November of 2022. Eventually the 1 standard deviation ceiling during the euphoria phases of the market gets taken out. Again, this is not financial advice, this is based on what prices have done historically speaking. You can see the last time around that 2 standard deviation ceiling back in March of 2021 was at around 60k. In November 2021 was at around 67k. Prices did go slightly higher than that, but that extrapolated to that overvaluation, if you were to extrapolate it to today's price, today's Bitcoin, that is coming in at around 207,000. That means a $207,000 Bitcoin would be as overvalued as Bitcoin was at around 69k back in 2021. If we were to now focus our attention on the 3 accumulation strategies for Bitcoin and the models that we have, the first is the simple moving average based accumulation strategy, quite similar to the chart that we showed on here. Instead of looking at it just exclusively based on the risk levels, we are looking at price as well as the risk levels. Per this analysis, again the color coded in terms of risk level, the risk is at around 51, almost a 50-50 split between the risk and reward at this point in time. And if you were to look at this risk level, this between this 0.4 and 0.5 risk regimen, you can find that before a parabolic move in a Bitcoin market cycle top, Bitcoin does spend quite a bit of time in this risk level. One could call this risk level as the last accumulation zone before the train really goes off the station and then off to the races. That is evidence from the data that we have for 2017 as well as in 2020. Again, one countering data is for 2019. Again, not always that once the prices go to this risk level, that means a euphoria phase is incurred. If the monetary policy is not favorable, then the prices do have this tendency to halt and pause at this level and then go down. But again, if the monetary policy were to favor Bitcoin's valuation, this is some of the some of the last accumulation risk levels for BTC. Again, this is not financial risk. This is what historically speaking has happened in terms of the prices associated with some of the peaking scenarios for Bitcoin. This is only, keep in mind, this is only 20 weeks outlook. Between 81k and about 94k, that is where the risk above the 0.6 till about 1 risk level is between the price action at between 81k and about 95k. That's the high risk or the euphoria based targets for Bitcoin per this model. And in terms of the dollar cost average model, the second model that we have, which did a great job of identifying the bottom in December of 2022 when the risk were between 0 and 0.1. Per this model, the risk associated with accumulation is slightly higher at around 77%. The 2 standard deviation peak regression line for per this model is at around 113 US dollars. Back in 2021, that level was at around $60,000. So that is, per this model, if a $114,000 Bitcoin were to pan out, that would correspond to some sort of a major top for BTC. This is a very conservative model. Per this model, the risk between 85,000, the price between 85,000 and 136,000 would eventually be a mid to longer term peaking scenario for Bitcoin per this model. We at the end we try to weight each of the model and come up with an estimated bull target based on model towards the end of the video. The time weighted average price based model for Bitcoin looks at the relationship between the price and this blue line, which is the time weighted average price, and does a decent job of identifying the peaks whenever the price is too far gone from this blue line. You can see that that's when the peaks occur. Per this model, right now the risk of accumulation for Bitcoin is at around 80%. That means not quite as highly overvalued as during some of the major peaks whenever the risk level is above 95%, but definitely not as close as during the bear markets of Bitcoin. So if we were to extrapolate all of this and extrapolate and provide a bull case estimated target based on these 3 models, you can see that the price at around 74,000 right now. The regression based risk model, this is a polynomial regression based model, not the DCA model that we saw, providing at around 11% risk, time weighted average price at around 80% that we discussed, the SMA model at around 44%. The weighted risk is at around 38%. And if we were to do an expected value for Bitcoin based on this risk reward approach, the eventual bull run peak forecasted by this model is at around 187,000 Bitcoin. And in terms of the reward, that is about a 2.5x from this current price. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye-bye.